Welcome back. Well, the next company on our radar is KRBL, and the company seems to have had a bit of a challenging quarter. If we look at the numbers, on an annual basis, the revenues declined by about 6%. Margins have been under pressure. They've slipped to 12.4% versus a level of over 18% same time last year. To talk about these trends and the outlook ahead, we have with us a KRBL CFO, Ashish Jain. Mr. Jain, thank you so much for being with us. So it seems to be pressure from the word go. And more so in your export markets. Just to tell us why there's been so much of pressure on the top line, on the EBITDA, and the margins have also come down from last year.
Sure, thank you. So, if you look at the quarter on a year-on-year basis, our total income is down by around 6%. Now, this is largely because of exports, where the revenue is significantly lower than the comparable quarter last year. So on the export front, two things are happening. So there are two parts of export business. One is branded and the other is bulk. Now, I'll first cover the branded business. Now there, we've had some distribution challenges for some time in one of our key markets, which is Saudi Arabia. We've been trying to address it, but it is a key market for us. Therefore, getting the right partner for distribution there is even more important. So we are progressing on that, but it's just taking more time than what was earlier envisaged. Now, that's really the prime reason why the branded export side has been affected. The other part of the export business is bulk exports, where we opportunistically export to global markets, where we find commercial deals that work well for us, especially in terms of the payment plans, etc. So last year, the same quarter had about 220 crores of bulk export revenue, while this year so far we've not come across deals that make sense for us. So both of these reasons combined have affected the export sales. Now, in the same breath, the domestic business, if you see, is growing from strength to strength. So in the quarter, and the question, Basmati sales in that business actually grew by 14%. We recorded a number of firsts. For the first time, domestic rice sales crossed 1,000 crores during the quarter. Also, our market share, as measured by AC Nielsen, is also at highest ever levels. So overall, I would say I think it's an impact of export, but that we see addressing over the next few quarters.
Just for the benefit of our viewers, let me put on board the export numbers. Exports for the company have fallen 47% on a year-on-year basis, and it now stands at 278 crore versus 524 crore. Could you break up in this export number? How much of it was an account of branded and how much of it is an account of bulk? What is the breakup over there? And on branded, when do you think you will be able to resolve the issue of distribution? What is the outlook in Q4 and maybe even Q1 of FY25 on exports particularly?
Sure. So in the same quarter last year, the total exports at about 501 crores. 524 crores. Now, out of which about 250 odd crores was bulk export. So like I mentioned, that opportunity is simply not there. The rest of it was, of course, branded, where, the factors that are affecting it, I've already mentioned.
Saudi Arabia.
Now, in terms of an outlook on export, I think we are working towards normalizing that situation, and I'll share more updates as and when I have them.
Just a quick follow-up on exports, Mr. Jain, before we talk about domestic. The government had set a lower minimum export price, right? I think $950 per ton was the price. Now, just tell us if that in any way impacts your bulk opportunity, because for your prime markets like Saudi Arabia, anyway, I'm guessing it's all Basmati exports, which would be above the current limit. And there's some talk that maybe this limit gets lowered further to $850 per ton as well. So just tell us, how will this affect your export opportunity, perhaps on the bulk side, if at all?
Yeah, so that's a fair question. The government did reset the minimum export price, but even at that point, our bulk exports had a higher realization. So, these regulations around minimum export price of Basmati had very, very little impact on our bulk business and, of course, on the overall export business as well.
Okay, fair enough. So that sort of gives us enough perspective on the export side of the business. You're hoping for a pickup. Let's come to domestic now, which has worked very well for you because your domestic revenue this quarter crossed 1,100 crores. The growth is, I think, over 45%. So what will be the drivers? Do you expect this kind of growth to sustain? And in the fourth quarter, I mean, now I'm going back to the total revenue question. Can domestic make up for the fact that your exports are still sluggish?
See, in terms of one segment making up for the other, we don't really look at the businesses that way. I think there is enough growth opportunity in both the segments. But just to give you an outlook on the domestic, we mentioned earlier we are driving a three-pronged agenda there. The first is to grow distribution. We are the largest player in branded Basmati in India, and even our distribution is a fraction of what national brands have in India. The other aspect that we're doing is that how to make packaged Basmati more reachable for consumers, not only from distribution point of view, but also from pricing point of view. So we've taken various initiatives which are working well. And third is, of course, to drive revenue from non-Basmati channels. So we've over the last 1 year, we focused on launching non-Basmati rice, which has worked well for us. So these three initiatives are what we continue to drive on the domestic market. Now, in terms of quarter to quarter, we generally don't get into quarterly guidance, but we are very positive on the direction of the domestic business over the coming years.
So can domestic business at least continue with this 15%, growth run rate?
I would say at least 10% is what you should look at.
Double digit.
Rest, yeah.
All right. We leave the conversation here for now. Thank you very much for joining in. We'll get into a break. We'll come back with more in the market. Stay tuned.